From Bloomberg World Headquarters in New York, this is Street Smart with Carol Massar and Matt Miller.
Welcome back, everybody. 4:12 on this Monday. Investors are trying to figure out if the two-month drop in gold prices is a short-term trend or not. In trading today, prices fluctuated, closing at the 1336 level. Suzanne O'Halloran has more on how hedge funds have been treating gold in the past few weeks. Suzanne.
Carol, they are treating gold as if it's a losing bet, especially over the past 2 months. Now, when we take a look at what gold has done since the end of December, net long positions, which track bullish bets, are down more than 20%, not only for gold, but silver as well, according to data compiled by the Commodities Futures Trading Commission. For gold, it's the worst annual start since 1997. Now, investor Brian Hicks of Global Resources Fund says investors are likely moving money elsewhere. What about into U.S. equities? He may be correct about that. In the past 2 months, the S&P has rallied about 7% as gold and silver prices have declined. Now, weakness in the commodities, these precious metals are hurting the companies that mine gold and silver. The Philly Gold and Silver Index is down 12% so far this year, a very rough start. Now, Hicks does suggest the pullback is temporary because we still have a lot of uncertainty with the European debt situation and concerns U.S. inflation will start to pick up due to the Fed's aggressive quantitative easing program. Now, taking a look at gold prices right now in extended trading, we've got gold down again. We're right at that 1334 level. Now, earlier today, we did see some modest buying after exchange-traded fund holdings of gold jumped 1%, the most since June. Separately, Carol and Matt, Morgan Stanley boosted its forecast for gold today by 6%. They predict gold will get back to that $1,400 an ounce level. So there's a lot of mixed signals about the direction of gold today. Matt.
All right, Suzanne, thanks very much. For more on the drop in precious metals prices, joining us now is Gijsbert Gronebig, and he runs a precious metals hedge fund as the founder of Silver Arrow Capital Management. We have him on fairly regularly, and you are pretty bearish. You forecast a collapse in the equities market sometime in the beginning of this year. And obviously, you're bullish on gold and especially on silver. What do you say about the drops we've seen? I mean, gold down about 6% so far this month.
Well, since October 2008, gold has basically doubled. I mean, we were 700 in October 2008. We have gone to 1400. So some profit taking is not, strange.
To be fair, the last time you were on with us, you did say you expected gold to come down before it goes back up the last couple times. But when do you see the turn? I mean, does it drop 10%? Does it drop 15 or 20? I mean, what's the catalyst to bring it back?
Well, I think, for example, the uncertainty in Europe. Yeah, because gold also dropped on the back of the uncertainty we had with, all the budget, the deficits and so on. And
things seem to be calming down a little bit in Europe. We talked about this earlier. You still think it's calm, but nothing's really changed?
No, well, I think basically what is going to happen is that, it's not going to go away. I think the euro eventually will break up because we're looking at a structural problem, and you can't sort of, they're patching up the problem.
Even though Angela Merkel comes out and says, I'm going to do pretty much anything I have to do to support the euro.
But she has to sell it to, the people in Germany.
But is it just selling, Heis, or is it she's saying, we got to protect this?